It's amazing when you hear the word rural venture capital investment. It sure doesn't sound like there's going to be this level of high tech. I don't know how you and how you help the branding to let people know that this type of level can be achieved in these rural areas is impressive.
Oh, absolutely. It's back to this. It's not for lack of competence or insight. It's just a different angle, a different vantage point to see some of the problems that, frankly, a majority of Americans don't see when if you're sitting in a metro hub, right?
Can you give our audience, well, so anyone, La Junta is somewhere in Colorado. That's all you need to know. Um, we will reference a lot of
Yeah,
smaller
Eastern
towns.
Colorado. Yeah.
Um, so if you're, can you give us an idea of like what your average week, average month, how many of companies are coming across your desk and how many of these do you have to make decisions on with the amount of funds you have? And then we'll go into how you make those decisions.
Sure. Yeah, I mean, when we started this 8 years ago, pre-COVID, mind you, the number one question, frankly, like experiment on our side was, are there enough companies? Is the deal flow going to be there? I
Mm-hmm.
mean, in the first year, part of part of the effort was building relationship and trust. There is a cultural divide in rural Colorado, and we really refer to it as like the guilty until proven innocent mentality, right? There's been a lot of folks that fly in with all the answers and then leave and never actually provide the solutions, um,
Mm-hmm.
historically, right? And so that's just part of the skepticism. So we spent literally hundreds of nights. I had a camper van, one of the original Winnebago rebels, and Corey and Jamie, my partners, had their own, right? But we literally camped and drove around the state and just built these relationships and cultivated, from the folks who ran the co-working spaces to the local entrepreneurs that were kind of the success stories and hidden corners, economic development directors, some of the, the banks, the loan funds, the whatever, right? And through that, we built a deal flow engine that now we see at least 250, 300 companies a year of like some level of qualified on the front end of that funnel. And then we end up with, deep diligence on, I think last year it was like 60, roughly 60 companies.
Hmm.
Um, so, I mean, like our stats are, we are seeing and going deeper and investing in more from a percentage basis than a traditional venture fund, but they're not crazy. They're not, you know, it's not one out of every three deals that we're seeing. Like the deal flow is not the challenge, especially in a post COVID era where a lot of these rural communities are actually seeing population growth and a bit of a resurgence for the first time in decades, right?
That's incredible to hear too. Your startup investing firm has a startup story. You guys are traveling around, living in your garage. It just happened to be a traveling garage.
Oh yeah, like I always joke, venture funds, especially small ones, not chasing big AUM. We're like a fixed income startup.
That's perfectly said. Okay, investment criteria. You see all of these deals. How do you make your decision that these are the right ones? And then we'll get more specific on that. So, in the broader theory first.
Sure, yeah, like look, we probably end up taking more meetings and leaning in as early as possible, right? So our criteria on the front end um, comes with a lot less assumptions. Um, the thing that we love to hear the most from a founder is, I think I'm doing something different, or I believe in a different way of doing things, or I haven't, right? Like, normally, if you're a VC, you're just skeptical of those from day one. But, like, back to the barn owl example, right? I think we actually have people living at a different vantage point, looking back into society and economies and businesses with a different vantage point. And for us, that's the really intriguing part, not the disqualifying part. But once we dig in, we're really looking kind of at the basics, right? Team, product, market, business model, financials. So those are my five things. Um, the thing that we probably end up discounting a little bit more than some VCs is market. And we
Mm.
have a fundamental belief that not every company should be coming in pretending like they're going to be the next unicorn, right? I'd rather see that bottom up strategy and pitch on how do we get our first 10, 100,000, 10,000 customers, not how we're going to take 1% of $1 trillion market, right? Because we all know that's wrong. But if you have a credible, bottom up type strategy in view of how to just solve the problem you set out to solve, I think that's really interesting, and that allows us to set the goalposts in a much more realistic way. We typically underwrite companies more for where the realistic outcomes are.